Hey traders, Nick Shaheen here looking at the action in the SPY on Friday, 8/23, and what a day. Whoa! I'm going to try to make it like a run through the chart and play it in not in real time, in 5-minute increments to show you how it unfolded and try to tie it to the headlines. And you be the judge as to what happened today. But before I forget, at the end there'll be like a subscribe button. Hit it. It's a YouTube subscription. It's free. It won't cost you anything. I post videos like this all the time. So give me a minute. I'll set it up and we'll go ahead. Okay, so this was the action into today. So this was the 8/22 price action. Pretty violent, but then recovered. Nice and even good overnight action. And then we had the first headline. And let me see here. It should be, I don't do this often, so let's hit it and see what happens. So it should be starting right here. Boom, China headline comes out. We try to recover from it. I'm going to pause it. So China headline, tariffs, blah, 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 come out, and we fell off a cliff. This was China's retaliation to the Trump announcement of the increase on tariffs on the whole shebang. That was a couple of weeks ago. They waited until now, and they came out and they said, we're going to put tariffs on cars, autos. I shouldn't say cars and trucks. So we fell off a cliff, then we settled, and then we had to deal with the Powell speech. And luckily, there was no question and answer for the Powell speech. So he said something where it was nothing new, but he didn't say the silly mid-cycle adjustment that freaked markets out earlier. So markets took it as a good note, and we started moving up before we had another rug pull. So let's play it. Markets, boom, rally, right? So immediately we went from really red. First of all, we went from really green overnight to really red to green, and then all kinds of stuff happened. President Trump came out and started a Twitter storm, and then we fell off a cliff. So the reins went from bulls to bears to bulls, and then the bears took them, or at least the bulls threw them on the ground and said, I'm out. And this was the day as it unfolded in 5-minute increment. Every candle here you see is 5 minutes. Pretty violent day. If I count it correctly, eyeball, it is about 160 S&P points travel just during this session, I think. Close enough. It's a whole bunch of points. I mean, we were down 70 or 80 points, whatever we ended up down as far as the S&P, but it was really a lot more than that. It was pretty active. So what does that mean? It means nothing. It means that the S&P has some repairing to do, and we are in a range. The range hasn't changed. The fundamentals haven't changed. The fears haven't changed. What changed? Sentiment. Sentiment was from, we're okay, we only have 1 or 2 really deep cuts, and we can manage those with the bleeding. But today we've got like 1,000 cuts. Everything flared up at the same time. We had nervous markets anyway, and then tweets here, tweets there, and even the coverage on CNBC became like they used to mock President Trump's tweets as far as verbiage and tense and accuracy. Today they were like angry in their covers. So something happened today. They were somebody in China, I can't remember who, some state media guy, is decided to fight a public fight with the U.S. And so the answer from the president here is seen as weird, and it was weird. So only time will tell how this will end up. Now, if I was a betting man, is that over time this will abate and we'll go back to buying. But right now, onus is on the bulls right now to prove that this recent low will hold. 28.20, 27, whatever we went down to recently will hold. Otherwise, if we lose 28.20, 22, which has been pivotal for a while in the S&P, so let's say visually here, I'm looking at the S&P 282. Let's see here. If we lose that, can I mark it up? Let's mark it up. I didn't mean to mark it up, but hey, it turned into this. This video was just for fun. No longer. If we lose this, then this might happen. So 276 eyeball, 272 I think from the weekly chart will also be. Now you could have another tweet Monday or no tweet, and then people start buying again. We'll do something like this, and then once we come up to here, then the rally could resume to do this, which was foiled. The tweet foiled. So anyway, we have the same set of problems. China, it hasn't changed. The amount at stake hasn't changed. We cannot be more negative on China, period. It's 540 billion. There's nothing more of it. It's how much you want to tax of it. 20%, 25%, 100%. So, President Trump cannot change the law to force. He actually tweeted that he orders all companies to get out of China. So you can't do that, but you can effectively do that by putting 50% tariffs, which would make it, or 100% tariff, which would make it mathematically impossible for anybody to do business there. So drastic measures, but anyway, so that problem is still there. The Fed is still dovish. They will cut rates to save the economy. The other problem is the political standoff that we have, basically a lame duck, where the Democrats won't pass anything for stimulus. They won't spend any money, even though it's good for the country, because it doesn't suit them into elections. They cannot pass anything to help the economy, which will help Trump to win again. So they're kind of stuck. I'm not saying it's a bad thing, it's an actual reality. So they won't pass anything. And the Republicans cannot pass anything without them, I don't think. So I'm not a political expert. So we have that problem. We have the economies in Europe that are suffering and going into contraction. Mexico also. So Germany is the big guy there. And they said they're not going to do stimulus there, but the ECB said their foot is on the pedal all the way. We have the bond market in a tizzy. Something they haven't mentioned today is that the yield curve has not inverted. When the day they covered that this yield curve inverted, that day right here, it hadn't inverted during market hours. It did yesterday on Thursday, and it did today, and it actually closed exactly flat, and it was negative, less than 1, which is inverted, basically the 10s and the 2s. So the 2-year bond yield became higher than the 10-year bond yield, which is not normal. So anyway, Nick signing out. You know where to reach me.